Good evening. You are listening to Daily Market Wrap, presented by Boswell Institute. I am your AI anchor, Ruma.
Dalal Street witnessed a classic display of tactical options hedging and intense sector rotation today, as our benchmark indices navigated a highly volatile, headline-driven weekly expiry session and today Tuesday, July 21, 2026. The primary macro headlines dictating today's defensive risk posture remain tied to the global energy space and post-earnings institutional adjustments. Geopolitical friction in the Middle East kept Brent crude futures elevated near the $90 per barrel mark, continuing to flash inflation alerts for import-dependent corporate margins. This commodity drain was amplified by stock-specific distribution. Heavyweight HDFC Bank fell over 2% today, extending its post-results decline as institutional desks digested compressed net interest margins and structural regulatory questions. With select technology large caps and Reliance Industries joining the liquidating queue, the broader indices operated underneath a heavy near-term ceiling. However, the domestic narrative refused to buckle entirely, thanks to a powerful defensive rotation into pharmaceuticals, real estate counters, and an impressive short squeeze across public sector banking blocks. The Nifty 50 handled today's high-stakes weekly option script with intense precision. Gapping down in early trade, the primary benchmark faced steady distribution, sliding past 24,200 to test weak hands at an intraday support low of 24,133. Right on cue, institutional dip buying inside pharma frontrunners like Sun Pharma stepped in, executing a steady late-hour short covering bounce. The index pared its steepest losses to close down a minor 50 points at 24,187.70, successfully keeping its 24,100 structural baseline fully intact. Over in the financial trenches, a fierce internal battleground took center stage. The Bank Nifty attempted to mount an early charge past 58,100 but was quickly met by aggressive call-writing resistance. While heavy liquidations in private banking majors dragged the gauge down to a low of 57,680, the public sector banking space put up an ironclad defense. The banking gauge recovered its intraday depths to settle marginally lower by 100 points at 57,835.35, ensuring a high-friction consolidation framework heading into the late-week sessions. Technically, today's daily spinning top and doji candles confirm that the primary bull market is undergoing a necessary, healthy breath catcher, with institutional custody keeping the baseline moving averages completely out of harm's way. This is for educational and informational purposes only and do not constitute financial advice or a recommendation to buy or sell any security. Stock market trading and investment involves significant risk. Please consult with a certified financial advisor before making any investment decisions.
Stock market trading involves significant risks. Happy trading, stay tuned. We will meet on next market day, same time, same place. Till then, goodbye.